Welcome back to the Dividend Diplomats YouTube channel, everyone. Lanny, Bert, the Dividend Diplomats, everybody. You know what? I've been buying Johnson & Johnson every single week for over a year now. This video is going to recap the strategy. I'm going to show you how many shares of Johnson & Johnson I own, and then we're going to ask a question. Am I going to keep going with this strategy? We're going to find out by the end of this video.
But before we do, guys, make sure you guys subscribe to our channel. Make sure to hit that notification bell so you don't miss a beat from the DD. Give this video a nice thumbs up because we want to reach the millions and millions of dividend investors out there. Because, guys, Bert and his wife have been buying not just a dividend aristocrat, not just a top 5 foundation stock for your portfolio, but a Dividend King each and every week for at least, 14 plus months, Bert.
Yeah, it's been, I think we started in March 2021, was right around when we started doing this. And we followed your automatic Vanguard investing strategy. It was kind of funny how this came up. I've been looking for a stock to do this with. I didn't necessarily want to go the Vanguard route just yet. I was looking for a company. We were prepping a Johnson & Johnson dividend stock analysis video. I ran the metrics and all of a sudden it just hit me like a light bulb clicked. And I'm like, you know what? This is the company we're going to start buying every single week. And hopefully you're going to see why when we run them through the stock screener again at the end of this video.
So, Bert, why have you been wanting to buy J&J every single week? Why?
Well, all right. Johnson & Johnson. Why? Fair question, Lanny. We love the company. We love the brand. Let's talk about their history first. Dividend King. They've increased that dividend for almost 60 consecutive years. They've increased that dividend through good times, through bad times. They're one of the goats of the dividend investing community.
Oh, it's true. It's true.
And if we're going to build a foundation stock position in our portfolio, we want a company like Johnson & Johnson that is one of the best, that has one of the best brands, one of the best name recognition out there, a company that we don't have to worry about the dividend being cut when times turn tough. If you're going to do a weekly investing strategy, in my mind, that's the kind of company you want to do. That's why we picked them for this.
All right, see, that's why you pick them. Now, Bert, you doing this for, the better part of 60 straight weeks. One would assume you might have at least 120 shares. How many total shares are you now sitting on between you and your wife combined?
Excellent question. You would think it would just be pretty binary, right? One per week, one extra share. But we've also reinvested some dividends. So we got some fractional shares that have come along on a quarterly basis.
Just a big reinvest. That drip's got to be huge.
Yeah,
we'll get into that, I'm sure.
Yeah, you're going to see here when I talk about the annual dividend, why that is so important. So we also picked up a few extra shares for my wife every once in a while when we were looking for stocks to buy. So I own 71.97 shares of Johnson & Johnson. My wife, with those a few extra purchases, owns 73.08. So in total, 145.05 shares of J&J.
Wow, way more than expected. So owning that many shares, what's that forward passive dividend income total right now that you're looking at?
Yeah, so after their recent dividend increase, which if everyone didn't know, they just announced a 6% dividend increase. You bet we were pretty pumped up with owning that many shares of J&J. My forward income is $3.25 from J&J. My wife, $330. So in total, our income from J&J is $655 on an annual basis. Quarterly, divide that by 4. That gives you $163.90. That's almost one share of J&J at this price per quarter combined between my wife and I.
So per quarter, if it's around $175 to $180 per share, every quarter you're pretty much getting at least one share on the drip.
Yep. So that means it's going to increase our forward income from that alone, almost $4.52 right there.
Wow. So when you got, say if you're at $655 in projected income, if J&J raises that again, call it 6.5%, you're going to be adding, if you get a nominal normal raise from good old Reliable, if they do a 6.5% increase right now today, or for 2023, that's a $40+ impact to your forward passive income total.
That's why we preach dividend investing. That's why we preach this strategy. We always talk about how automated and how easy dividend income is a passive form of passive income. to your point, almost $45 from a dividend increase alone without lifting a finger. We're getting almost one share every quarter combined from J&J without lifting a finger, which is going to help compound and keep growing that passive income in addition to the purchases we're making. That is why we love this strategy of dividend growth investing.
No, I mean, and this is, community out there. So this is a great example of just continuously buying a high quality business that's been around for, gosh, generations, that stands the test of time, that continues to be on the cutting edge. Speaking of cutting edge, J&J has some pretty interesting spin-off plans coming up.
Yep, that's exactly where I was going next. One of the other reasons we love J&J is we love their pharmaceutical division and we love the name brands in their consumer staples division. So they are following the trend of so many other companies. I'm not going to say AT&T is a trendsetter by any stretch, but they led the charge with companies that were slimming down, spinning off divisions. IBM's done it. There have been countless other companies that have spun off instead of being the conglomerates the way we used to think about them 10, 15 years ago and driving value. Leaner, focused on your specialty, separate companies seems to be the trend that we're seeing here in 2021, 2022. Johnson & Johnson is following suit. Consumer health divisions going here. Pharmaceutical divisions going here. We'll be shareholders in both companies. I love them combined. I'm going to love them separate in our portfolio as well.
What is your expectation of that dividend post spinoff from J&J?
It's a good question. We're still waiting to find out more information, but they're still a dividend king. Their mentality of growing dividends and driving value to shareholders isn't going to go away just because they're spinning off into separate divisions. So I'm expecting the dividend to at least be maintained and continue their growth streak. Again, don't have any information on that. You're going to have to wait and see how this develops. I could be wrong. I could be right. Who knows? But that's just what I'm expecting.
Honestly, I think you're right. I hope they take a page out of Pfizer's book where they at least maintain their dividend or even do a nominal dividend increase as well, right out the gate. Maybe it doesn't have to be the full 6.5%, because I'm assuming the shares of the of that other spinoff that they're doing with all the other, small consumer branded companies, more than likely will have a nice solid dividend yield with soon to be dividend growth as well, right?
Yep, that's absolutely right. So, it's going to be interesting. That spinoff isn't stopping me from continuing to purchase Johnson & Johnson. I'm going to keep going until we hit that threshold and that goal of where we want to go.
I'm going to keep skinning that cat.
Yeah.
I think some of the other questions the investors in the community may want to know, I know I want to know, is what's the plan? Do you see any stoppage to the J&J investing plan? What are you and your wife thinking right now?
Well, I think in my mind, the reasons why we would stop it, and that I think will help get there here in a little bit, would be if the company's price shot up and it was significantly overvalued, or there was a fundamental change in the company. Those would be the two reasons why we would stop. We already kind of addressed the fundamental change in the company by talking about the spinoff, and I've already determined that's not going to stop this strategy for me. I'm excited to where this company is going. So, let's check it out, Lanny. Let's dive into some of the metrics here to see if Johnson & Johnson has anything changed with the price that would cause it to be overvalued, where I'd screech the brakes on this, put it on pause, and come back when it was trading at a better valuation.
So what's the stock price we're about to use diving in using the Diplomat stock screener?
I'm going to use a share price of 175.65, which was about where they opened the market here on Monday, May 9th. So let's jump into the three metrics of our stock screener. We'll put them down here below, but you should all know them by now because you are avid Dividend Diplomats YouTube channel followers. They have price of 175.65, divide that by the forward EPS at 10.26, PE ratio 17.12. Still below the market, not screaming overvaluation, which would be the reason why I would stop it here.
Yeah, wow. Yeah, can't argue that. 17 price to earnings.
Yeah, payout
Great.
ratio. Yeah, payout ratio falls right in our perfect payout range with that increased dividend of $4.52. The payout is 44.05 after the increase. So, hey, yeah, nothing more to really say there. History of increasing dividends. We call them old reliable because that dividend increase is just so consistent. 5-year dividend growth rate, 5.79%. Remember, they announced a 6% increase this year, right on the line, right on the money.
And they've been doing it for almost 60 plus years for good old J&J. And we like to look at that little bonus metric, the dividend yield, which is how much passive income in the form of dividend income by owning J&J stock you currently receive. They currently yield 2.57%. So for every $100 you invest into J&J, you receive $2.57. So Bert and his wife have been investing approximately $360. Doing the quick math, you're probably close to that. What, Bert? $9 in, some change from a forward passive income streak or income that you're adding.
Yep, that's absolutely right. So let's get back to that question. I said that the other metric is Johnson & Johnson overvalued? No. In fact, they continue to perform well in our screener and remind me why I picked them as our weekly stock purchase. These metrics are phenomenal when you put them through the Dividend Diplomats dividend stock screener.
So Bert is continuing on right now with J&J. Again, just to do a quick summary of how much they own, over 145 shares, producing over $655 in passive income by just investing consistently in a high quality dividend growth stock, turning on the dividend reinvestment or DRIP. DRIP is turned on, and each quarter they're grabbing up essentially one share of J&J right now, which each share is adding another $4.52 in forward income. Then when J&J also increases their dividend like they did in April at a tune of well over 6%, that also adds a nice mound to that forward passive income total. And guess what? Bert already knows this, but it's going to continue to snowball and get bigger. Again, DRIP, more reinvestment, dividend growth, plus buying shares each week.
Yeah, absolutely right, Lanny. We are so pumped up, and you know what? We're going to keep going. Just selfishly, I'm not going to stop this at 88 shares. No, I'm not going to stop.
He's not stopping.
No, I want to just see my wife and I get to at least 100 shares each of Johnson & Johnson before we turn off this strategy. Or
let's go.
That's going to be the next reevaluation point. When we get to 100, it's going to be, do we keep going, find a different stock? Is it become too much in our portfolio? Or what do we want to do? But everybody, again, let me know in the comment section what you think of this Johnson & Johnson weekly purchase strategy. Do you do your own automated investment strategy where you buy Vanguard ETFs like Lanny every week and some even daily like Lanny does now? Or do you find a different Dividend King, Dividend Aristocrat that gets added once per week to your portfolio?
And guys, let us know in the comments if you think Bert and his wife should keep going. Definitely break that 100 share each threshold. Let us know. If you haven't already, give this video a thumbs up and subscribe to our channel. We're here to help you, show you that dividend investing can be a great way to build passive income by essentially automating as much as you can into high quality, either businesses or ETFs, and getting to that financial freedom. Bert, anything else to add?
Let's go. Let them know.
Let them know. That was Bert the Hurt and Lanny from the Dividend Diplomats. Over and out, baby.